Me.
And tonight we've got some vital tax tips for the millions of Americans with 529 college savings plans. Our next guest says there are times you shouldn't use these savings because you could be missing out on thousands of dollars in tax benefits. So how do you juggle those 529s? We're asking Wealth Health Managing Director Rich Coppa. Rich, welcome back to the show. Good to have you here.
Nice to see you.
So, we talked a lot about 529 plans because the president really tried to shoot them in the foot and remove all their tax advantages. But you say even if you are using that 529, you have to be careful because you'll lose some tax benefits. What's the calculation you're making?
So the calculation is that the expenses that are paid out of a 529 plan don't qualify for the expenses that you're listing on your tax return if you're trying to qualify for the American Opportunity Tax Credit or the Lifetime Learning Credit. For those folks that could potentially benefit from a credit on the tax return, you want to take that credit. That's dollar for dollar offsetting your taxes due. So what you want to do is, to the extent you qualify, make sure that you at least pay for those expenses out of your own cash flow and therefore can get the credit rather than taking that expense out of the 529.
It's all about managing the money you have in the kid's name, the money you have in your name. Tell me, of all the credits that you've mentioned, which is probably the most valuable to the most people? Most
people, if you qualify, the American Opportunity Tax Credit is by far the better deal. And the reason is it's a $2,500 maximum credit versus Lifetime Learning, which is $2,000. The other thing is the Lifetime Learning is per tax return, whereas the American Opportunity Tax Credit is per child. So it's a credit, maximum credit of $2,500 multiple times, depending upon how many people you have in school. And the American Opportunity Tax Credit is actually a refundable credit up to $1,000. So, that's something you can't get with the Lifetime Learning Credit. Actually, file your tax return. Even if you don't owe anything and you qualify for the credit, you get $1,000 back. So it's important. Many people think, well, I don't have any income tax. Why file? To get the refund.
Let's get back to the 529 for a minute, because we know that's a big middle class benefit. Lots of people setting aside money every single month. What's the best way to use that and to manage that?
I mean, I love the 529 plan. I think it's a great plan. Look, for people who are making over $160,000 to $180,000 in adjusted gross income, you're not going to qualify for these credits anyway. So the 529 is a great plan. You could maximize the funding. For those that have the cash flow, you could do up to 5 years of gifting. That's up to 5 times 14,000.
And grandpa can get involved here. I'm sorry, what are the numbers there?
So 14,000 is your annual exclusion. You could front load a 529 plan by 5 years. 5 times 14 is 70,000. Husband, wife, times 2, 140,000. These are big numbers. So it is an advantageous plan, and that's why I think, President Obama talked about trying to, lower the benefits of that, because it's beneficial to those of the higher, wage earners.
Right, but it's beneficial to everybody. It's really a middle-class advantage.
It's a win. It's a win for everybody. Anyone who could put money away and grow it tax-deferred is a win-win, or tax-free if you use it for college is a win-win. The problem here, too, is these fine-line issues are very difficult. This is tax planning, and I always say you have to run the numbers, but the problem is some of these aren't extended till too late in the game, after you've made your college payments throughout the year, and it might be too late. So the safety is, if you think you're going to qualify, pay $4,000 of your expenses out of your cash flow. You have the possibility of getting the tax credit.
All right. Great advice, Rich. Thanks for coming on.
Thanks.